The markets are set up perfectly for a drop to commence this week. My name's Des here at Grok Trade. This is the weekend edition. Good through Sunday, September 21st, 2014. And you can probably hear it in my voice right now. I am fighting a summer cold. And taking a look here at the S&P 500, this is a big time problem. And you're going to hear it here. With the trend line, this goes back to June area 2014, July, end of June, beginning of July right here. We come across resistance, and that's in July. Over here, major resistance. That puts us in August 2014. And then we end the day on Friday, where we try to break above that resistance, but we come right back down. Here we get a bearish thrusting or a spinning top reversal pattern at a resistance point, and it hits perfectly right here. With another trend line drawn from this swing low here at the beginning of August to this swing low in the middle of September, what you'll find here is we have a rising wedge, which is confirmed now with a bearish divergence on the MACD centered oscillator. And you'll notice that the MACD line that's coming higher is starting to get closer to the signal line. That's also demonstrated in the histograms getting smaller. So this histogram, once it ticks on the lower part of this line, like you see here, that means you will have a crossover taking place on the MACD and the signal line. That crossover means there will be a drop taking place on price action here on the S&P 500 index. The problem is, this being a rising wedge, if we are coming into the apex of this wedge, that if it does start to drop, it's going to start challenging the 20-day moving average and this lower trend line again. This will be 1, 2, 3. On the third challenge, a lot of times you will see a reversal take place when you come into these apexes. So what I foresee happening here, if we do start to make new lows, meaning that if we go lower than 2006 on the S&P 500, we could get some more selling and we could have a big red candlestick or candlesticks here with a breakdown of this rising wedge. And that could spell damage to the markets as a whole. Here we're looking at the weekly chart in the S&P. We popped higher, and now we're going into a sideways trading range. Here we have red candlestick closing down here at the bottom. We open this last week, we go higher, and we close at an area of resistance. I foresee another red candlestick going into next week right here. It would make sense that that were to happen. Going back to the daily chart, for the week to be red, that means we need several down days right here, and that means we will have a confirmed rising wedge breakdown. If that being said, there's a decent chance that on the weekly chart, this red candlestick could drop down below this area of support, which is the 1985 area. So, looking here at the NASDAQ. NASDAQ is kind of building a high base. It has run the gamut on resistance and support. You can see we touch resistance, we touch support. It's challenging them both, but this is a big time rising wedge. This is problematic on the weekly chart on the NASDAQ. The daily chart here is we have this what's called a dark cloud cover reversal pattern at a high. So we have this high here, we come up, meet that high, now we have a reversal pattern. If we drop here, this will be a double top trend reversal pattern on the daily chart on the NASDAQ. Take a look here at the banks. The banks, this is a very important thing I want to show you. The markets are in a lot of trouble. We have resistance and resistance. This is the daily chart on the banks, biggest index on the NASDAQ. 450, 470 banks are on this. Resistance, resistance, resistance. And this is a daily chart. We come down and look at where we're at right now. You can always make this chart down here in the bottom corner. You can make these charts full screen to watch this in high definition. but we ran into resistance on Thursday. Friday we kept higher, we come right back down. We're at a big time resistance point. We see a lot of downside potential here on the daily banks. If the banks drop, the markets will follow for sure. If we look at the weekly chart, big symmetrical triangle, challenge resistance. Last time we hit this line, we dropped. We hit this line right here, we dropped. We hit this line right here, we have a good chance of dropping. So very, very dangerous ground where we're at right now in the markets. And if you look at the VIX volatility index, we hit, and actually get rid of that. We go higher, 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 higher. We pull back to this support area, and it looks like it's getting ready to go bullish. We have a bullish thrusting pattern, like we're wanting to start heading higher. Furthermore, we have confirmation here with the MACD line going down, signal line going down, but look how close they're coming together. We have the histograms getting smaller, confirming that those two lines are coming together. Once they cross, you'll get a positive histogram tick here, confirming a crossover. And if that's the case, that means the VIX will be going higher. This is an inverse indicator, meaning that if it goes higher, the markets are going bearish. So this is a warning video that I think all of you should find very beneficial. Share this with your friends. Do not be left in the dark, and certainly don't let them be left in the dark. And this is all brought to you by Grok Trade. The website, if you go here, a lot of free trading things in these three quadrants. The premium stuff, where you go from amateur to professional, great information, is found right here under premium products. Hope you can join us. Thank you so much for being a part. We will catch you guys soon.